Thank you very much, and welcome back to the program. 5 minutes past the hour. Ladies and gentlemen, Tuesday morning, 8 o'clock. You know what that means. It's Chuck Malamut, and this program is paid for by Chuck Malamut, who is a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this broadcast are those of Chuck, do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast, and they are subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. Chuck, I know you have a very hearty agenda ready to go, but it's not lost on me that 2 records were set yesterday, Chuck.
Harry, good morning. Yeah, and those records will probably continue. But before I get there, I just wanted to carve out just a couple of minutes. First of all, I did have an opportunity to read that atrocious article.
Did you wash your hands after?
I disposed of that of the rag, so to speak, and it kind of reminded me. I remember as a child when my dad and uncle were in the running hotels in Atlantic City, that my father was vehemently opposed for many, many years regarding the local AC press at the time. And it looks as if they're up to their old antics.
And you ever have something go on, Chuck, that you don't know why, though? I mean, look, I tangled with Paul Murkowski as a very young broadcaster, and there was just no, I found him to be a very vicious person. There was no, squaring that away. I didn't do anything to these guys. I don't even know who they are. So it's unprovoked. Now, of course, you're going to not print things that you should print when great milestones are happening, and then you pervert and twist and make it look like a criminal, mob syndicate to get a street, and just the filth of what they're doing. I'm not going to take that lying down. So I'm firing back because of what they've done. But I didn't do anything to promote this this atmosphere. And in fact, I had a great relationship with the executive editor and with the content editor. Until this group,
I guess from sort of as an outsider looking in, I think that Harry, you've scooped them on multiple occasions, and I think the most recent with everything that's happening in Atlantic City, particularly with the Board of Education. I think you probably hit a nerve with them, and I guess this is call it whatever you want, call it retaliation. Very poorly written article, made absolutely no sense. Putting a photo of Nucky Johnson, with the article.
Al Capone.
I'm just trying to figure that's ancient history.
But he didn't even get a street. So what do you go into a New York newspaper and a picture of the organized crime boss convention of 1929 in Atlantic City? What is that doing? Well,
who knows, Harry? But I certainly would not want to be in their staff meetings as we're watching declining circulation. It just continues. It's sort of like a ski slope. We'll talk about the equity markets in a minute. How you continue to make day in and day out highs in that Rodney day. We're still going through the Rodney Dangerfield rally where it gets absolutely no respect. But I think what is happening with that paper is it's just directly the opposite, where your circulation just continues to decline. I'm very interested to see, the redact of the paper. I think it's coming tomorrow.
No, I think it happened today.
Today.
I don't get it.
Okay.
But so here's the deal. I don't know if you heard me because you were doing a lot of show prep when I was finishing up the last hour. But I am creating a segment on this program called the Region Section. Because it
is today, actually.
Yeah, they did away with the region section, so they're putting a couple extra pages in the A section, which is a terrible section to begin with. Now it's going to be even worse. So I'm going to be the region section. They don't own that term. I'm going to be the region.
Well,
section.
Look, obviously you'll do a better job than they have, and I know you've talked about it before. They've just done an atrocious job with the business section, where it's down to one page at best, and a lot of the news that's being reported is typically a day or two late, and then what is happening in the sports section. I do like the fact that they have spent a fair amount of time with high school sports and Stockton University, but I think, as you said it on multiple times, you can't even get a box score from a home Phillies game from the night before. So it's those sort of things, and I think that the Harry Hurley way. I'm looking forward to whenever that day is going to be.
Wednesday, July 1st, 12 noon.
So I will put that on my calendar, and
thank you.
You'll have a nice sunny, warm day in the mid 70s, no low humidity.
Thank you.
So that's pretty exciting, and obviously you have
I'm inviting Don King. I'm inviting Nucky and Al Capone and Bugsy Siegel and Lucky Luciano and Colonel Kunal. I'm inviting all the gang. All the guys. All the guys I hang around with.
It should be quite an event then, Harry.
Oh, yeah.
Congratulations.
Absolutely. I mean, I got to go. The press is never wrong. That's who they associated me with. Keep in mind, 95 people got this in 161 years, and they also said almost everyone has a street named after them in Atlantic City.
Maybe you can arrange to get one for,
So I want to have everyone come out. Everyone come out.
Okay.
Anyhow. Hey, Chuck, what about the fact that yesterday was a double record-setting day?
Harry, if you take a look at the equity markets, as I said a few minutes ago, the fact that for the longest time the equity markets get absolutely no respect. We've been through a fair amount. Actually, we've been through most earnings. Unfortunately, this morning Walmart reported and they missed by a penny.
I thought it was 2 pennies, but whatever.
But they have,
it was supposed to be 105, I think, or 103.
I think it came 103. It was supposed to be 104. But the problem is it's a miss.
Yeah.
And, that is obviously very disappointing. So that stock is off, pre-market.
Will they get absolutely hammered today?
Harry, I don't think they're going to hammer so much. I think
they were right there.
I think, because Home Depot is firing on all cylinders and so is Lowe's, I think that's going to help, a miss by Walmart. But
let me ask you this. It's a very good description when you say the Rodney Dangerfield type of, rally or result. How come we can set 2 records yesterday, Dow, S&P? We set 2 records, and yet right after that is said, they say very bad things like, it's about the interest rates and all. It almost as though it's not allowed to be good news.
Harry, if you go back from March of 2009, we have been through a lot as a market. We've been through a lot as a country. Again, the question is, where is the economy? Because that oil, the cut in oil that we all were very, very happy to see several months ago, that has sort of dissipated with oil now up 25% from its low. So that tax cut, so to speak, and from the consumer's perspective, was supposed to get spent, and it wasn't, or it hasn't. So I still think there's a fair amount of skepticism with respect to what's going on, within our economy. And then if you look at what's happening, particularly in Europe, it's sort of a repeat of what we did here in the U.S., much needed, quantitative easing. And if you look at those marketplaces and you look at the Far East, I mean, and we talked about this, it seems like a broken record, Harry. And if your listeners haven't gotten it, they're either not paying attention or they just are going someplace else. But, they need to get some of their capital outside of the U.S. We will have a good year here. I'm pretty convinced of that, Harry. I mean, going into yesterday, the S&P was up a little bit shy of 4%, but the international markets are, beating the U.S. fairly significantly, and it's probably going to continue at least through this particular year that we're in. Now, you asked about the market, and I think a lot of it has to go back to earnings. So if you take a look at what is happening on the earnings front, literally the year over year, despite a fairly good global economy, earnings in the S&P were down about 5%. And, what was happening is as we got into the earnings season, for the first quarter, analysts, lowered their expectations, fairly dramatically. And they did it because there were 2 headwinds out there. We did talk about, the falling oil. We talked about the escalating U.S. dollar, which, kind of both went to the sideline, so to speak, in the last several weeks. But right now what is happening, the euro, even though, has fallen somewhat over the last week or so. So that has caused a stronger dollar. But if we took out what was happening with energy, not that I would ever suggest you exclude an industry, you can't. But what happened in energy as we got into the end of the year and beginning of this year, we take out those earnings, we would actually see year-over-year earnings growth of about 9%, and that's sort of in line with historical averages. So what is happening, 70% of those that are reported, about 90% of the S&P is reported right now. Of that, 70% beat earnings expectations, but only 36% of those companies reporting beat the revenue number. So I think you have said this on multiple occasions, and you referred to it in your times when you worked at Trump, and we had gone through some fairly challenging times at the Gold Nugget way back when as well. It's a matter of these companies doing more with less, and while I feel awful, and I know you do as well because you've spent so much time on what is happening in Atlantic City. The fact of the matter is, I don't care how you slice it or dice it, Harry, you just have to do more with less. And, I mean, that's easy for me to say, not so easy for you to say, because you're going to do your best to help, get this on the right path. But unfortunately, the city you got to do a rewrite here at this point in time.
See, I totally agree with that, but I also believe that the way that it was all set up, the revenue sharing, if you will, when things are not as bountiful here, I think the whole relationship has to be recast. Not just that you make cuts because revenue is down, but also the way that Atlantic City pays the amount of money, the amount of money that comes out of the city that goes all over the state to fund senior citizens programs and all these other different things. It's only looking at the expense side, and it's not looking at the revenue side. And I don't think that's fair.
Well, Harry, it's absolutely not fair. And I know that you're a big fan of our governor, but it seemed as if he had his second summit here, and really haven't heard much from him since. Obviously, he's got other things on his agenda right now, and in his personal endeavors and efforts, but
he did put the team in place, though. He put the fiscal monitors, and the emergency managers in place with a consultant, and then the consultant did the first leg and left, and now you have just Kevin Orr, or Kevin Lavin, rather. Kevin Orr has left. So, I mean, in fairness to Governor Christie, he did what he said he would do. He met. They determined the needs. There is a report that's actually being done, and Lavin is still going at it, at his level. So people have said that, though, and I think that if we were to poll that question, you would be proven right. But I think in fairness, Governor Christie did do what he said he would do.
Well, I guess the expectations of any great leader is that, you see through, you see it to the end, and you are constantly involved in the process. And again, that's very easy for us to say. We don't know exactly what's happening, behind the scenes, and hopefully at the end of the day, those that are going to be impacted are going to be able to secure employment in the area, in the field that they're trained, to work in. Because if not, it's just going to be, as you mentioned in the last hour, more foreclosures, more short sales, the plummeting real estate values, and you add more hundreds. It's 226.5 out of the city side of city purpose tax of the Board of Education side. Then you have over 200 employees from the city purpose side of the payroll. You're talking 400 and some more people times whatever, 2 more people that are affected at least. You add them to the other 10,000. It's a very tough narrative. Yeah, I won't use the word I was going to use on air because I think a lot of people will be offended by it. But yeah, it's just a really, really bad situation that needs the focus on you got to get some very, very intelligent people involved, and hopefully cooler heads prevail. And the city gets back on the right track.
And I believe it's in the process of doing that now very well, and a lot of really good markers that you could call out. The great job in selling the city, the Meeting Planners International coming for next June, and what that's going to mean. That's 2,000 people that are each responsible to book 7 events around the country, and they will have experienced Atlantic City. There are a lot of good things that are happening. The one thing that I think and this fits into the Malamut financial program because it is a financial situation, I think this area has to push back with all of our might. Even people that don't like each other, that don't get along, everybody's got to kumbaya, get on board with each other, and we need to fight this issue of casinos in Meadowlands and other parts of the state with every fiber of our being, because that will mean another 2 to 3 casinos will surely close, and that's thousands more people out of work and a significant destabilizing to our leading industry by cannibalizing it in another part of the state. And there are people ready to do that right now.
Yeah, and Harry, the other thing that I think we sort of lost focus on is that, several months ago, the state of New York approved, I believe it was 4 licenses for full-fledged Las Vegas-style type gaming. The resorts and the closest to New York City is actually just outside of Monticello.
Oh, so that's a good reason not to do Meadowlands then.
So that's going to be, that project is expected to be open in the next 18 to 24 months.
That's bad for Atlantic City.
Yeah, it's certainly not going to be helpful for Atlantic City because you can get to Monticello. Your drive time is about 30 minutes less, I believe, 30 to 40 minutes less than it is driving from New York to Atlantic City.
Well, that's more dilution, more inventory and gaming product coming online, and the competition from all these jurisdictions has made such a difference. It's a good reason not to build in the Meadowlands.
I think I agree, Harry. I mean, it's
because that will hurt Atlantic City a little bit. It would hurt Meadowlands even more.
Correct.
And so let's not hurt our state. Let's not hurt our city. And good. So I don't like it that that's happening. But since it's happening and we can't stop it, we should leverage that.
And, again, I'm going to kind of segue here. Atlantic City, again, it's the Rodney Dangerfield. It gets no respect. And it's sort of the same thing that's happened in the equity markets. And if you take a look.
When I read all about the records of yesterday for both the Dow and the S&P, it couldn't help but immediately say something about Greece and the debt.
Well, Harry,
it's like, come on, it's like an ant, but around the world.
Well, it would be like a 2%. If Greece were to pull out of the euro, so to speak, it represents about 2%. But you think about this for a minute. Go back to the huge tech rally that we had prior to the tech wreck, so to speak, where everybody was on board and you couldn't buy enough of a good thing. So this is, you kind of take this with a grain of salt. Yes, you'd like to be out there waving the flags and saying, yes, the equity market made new highs and everything is wonderful. But, it's really not so bad when you have negative news come in and try to derail the markets.
Let me share with you a few words. They come from a Wharton School graduate who you know very well, and I think it's almost impossible to deny what Kirk Conover is saying here. There are many skeptics of this market because broader economy is weak, and therefore stock market prosperity looks artificial. Pretty fair comment.
I think it's a shame. It's a fair comment.
If we would take care of the broader things that he's talking about, our markets would even be roaring even more.
Yeah,
this is in spite of that.
So let's that's a great comment. Let's kind of take that comment and delve into it a little bit. Okay. So let's talk about retail sales for a second. Mm-hmm. As I mentioned to you a few minutes ago, you would have thought with the cut in gas at the pump, you would have seen that get back into the economy. It didn't. It got into quote savings accounts. So retail sales figures that we're looking at right now are not at the anticipated number. And then you have the Walmart number from this morning, which doesn't help. We've had and again, I know you'll dispute this, but it's been reported that we have solid employment gains. Yeah. In And again, I know you're going to.
I wish I could feed my president my monthly report and put such goop in my report, because those words are hyper technically accurate, but they're truly intellectually dishonest.
They are, Harry. So retail sales for the month of April, were flat, and again, so what we think is happening here, the consumers, because they are somewhat concerned about the future, are saving rather than they're spending. But the expectation is, Harry, is that as we get in through the summer and we get in the latter part of this year, the consumer sector is going to improve somewhat. And if it does, that will help growth within the economy. Another item that Kurt had just mentioned in his 2 sentences is the fact that the economy is not yet accelerating. I think it's pretty obvious. So we had a weak first quarter. Most of the data for the second quarter that we're seeing right now, it has not picked up noticeably, and we wouldn't be surprised if first quarter GDP was actually revised lower. One of your famous quotes. The second quarter should be better than the first. But again, those numbers could be somewhat disappointing. So again, if you take a look around the market, you kind of get a sense for why they're constantly trying to throw cold water on these rallies that we continue to go through. Even though you set these record highs, Harry, in the S&P and the Dow Jones, we're only up 4% year to date. So it's not as if. It's not as if we are up substantially. When you go across the pond, so to speak, and you look at the FTSE's up about, which is the UK's up about 10%, and this is not including the rally that's going on this morning as we woke up. Germany's up over 10, the Italian market's up over 17, the Japanese, Hong Kong, Shanghai markets, Harry, are up anywhere from 15 to 30% year to date. So. It's sort of a rewrite of what we have said previously with respect to you need to take a serious look at what you have, and if it's not working, you might want to do something with that capital.
A couple of minutes before the bottom of the hour break, Chuck. We can't control some of this. I mean, the unemployment numbers look good, so they favorably impact this. They're really not good, but I won't get into that. Some of the other things that you usually see coming out of a Great Recession, which is really robust growth, we didn't see that. I also believe that's because of the policies that are put in place that keep that type of prosperity from happening. How would you describe how the markets have been able to, in my estimation, wildly overachieve based on all these other factors and variables really that are beyond your control, but yet you're directly impacted by it because they do affect the result? I think it's almost like two sets of train tracks. And one is got a great conductor and it's going well, and the other is just hopping and bopping and skidding all over the place. And yet we're setting records in what I think is a crazy dysfunctional environment.
Harry, it's a really good point. And I think if you look back at what happened over the last 6 years, we enjoyed this the Goldilocks, as we'll refer to in investing philosophy, that backdrop. So what happened was investors over that time period, had, if you look at the economy and the way the economy was moving, was strong enough to push most asset classes higher, but not strong enough with respect to inflation or monetary policy emerging as particular threats. So now that we have uneven economic growth and signs of, we talked about this last week, potentially, wage inflation, moving higher, the environment that we're in right now, it's going to become a little more difficult, and you got to be fairly selective in your asset allocation to make absolutely certain that you're buying the right industry groups.
Brief time out. We're going to come right back. He is Chuck Malamut. I'm Hurley in the morning, and every Tuesday morning in the 8 o'clock hour in our 25th year together. And Chuck's been doing what he has done so very well as a highly regarded financial advisor. He's been doing it longer than the 25 years that we've been doing this program together. To reach Chuck, he heads up his team at Morgan Stanley's Northfield office, the Malamut Group, 609-383-2010 to reach Chuck and his team, 609-383-2010. As I feather into the break, I've also learned and confirmed not only has the local daily, the Press of Atlantic City, eliminated the region section, which we're going to pick that up here on Hurley in the morning. If they get all crazy and have some patent or claim privilege to the term region section, which I don't think, I'll turn it to the local page. But whatever, we're going to pick that up because we need that now more than ever. The person that made that decision should be fired. I would fire you immediately. Now I have learned and confirmed that they've eliminated the second commentary page, very stupid, and they're not running an editorial every day anymore either. Thirdly, stupid. Not 3 strikes, you're out. This is Bozo the Clown newspaper at the moment. We'll be back in just a few minutes. Thank you, Executive Program Director Chris Coleman and Shore Medical Center President and Chief Executive Officer Ron Johnson. Good friend, great friend, actually, and a great partner. We're visiting with Chuck Malamut for all of your financial planning needs. I say this unconditionally. Do as I do. I always tell you this. I never ask you to do something that I haven't already done. You know, the expression about I wouldn't ask you to do something I wouldn't do, to me, falls flat because that's just words. But if you've already done it and then you advise people to do the same, it's because you are speaking from your own wide spectrum of observation of knowing what this team is like to work with, and it's really a great team. When you dial 609-383-2010, you'll understand right away the level of professionalism, the competence factor, and the follow-up and attention to detail that you will experience with Chuck and his team. The Malamut Group at Morgan Stanley, their Northfield office, 609-383-2010. Chuck, sometimes I go to the Financial Times and I read some things that I consider to be pretty interesting, and a group of leading financial executives, even some I think that you know, are quoted in this piece. And once again, it's like the glass is never allowed to be half full. All these financial wizards are basically saying that they have a fear of a bubble. I don't know. I'm a layperson, but do they want to have a fear of a bubble? Is there a fear of a bubble? What you and I very intellectually, honestly spoke about for an extended period of time. I saw that tech bubble coming, and I was not a financial wonderkind, as you know, but I saw it coming because there was no reality to the way things were being valued. If something to me didn't look like it was worth anything, then how did it have so much value assigned to it? So that always looked like something was going to pop, and it did. But are they wishing a bubble? Are they wishing upon a shooting star? What do you think of that?
I don't think we're wishing for a bubble, Harry. I think we're just, again, I'll use the word cautiously optimistic. And if you look around and the amount of capital that is out there that needs to get to work, and what has happened historically over the last several months, it certainly points to potentially more positive things happening, with equities. But again, you have to be careful of what you're doing. I mean, take a look at last week, for instance. I think the world got caught by surprise. I mean, here was a company that you still have an email address, and so do I.
Yeah.
Of a company that basically
we're progressive.
No,
we're not old-fashioned.
No, we're actually dinosaurs, but that's okay.
Do you ever get kidded about having your?
Not anymore.
I have this one person in my life. They're very professional. They said, Harry, come on. You're very computer literate. You're really professional. You're really savvy. They were really building me up. And they said, and you're Harry Hurley at AOL.com. I said, come on. I said, you got to understand. I have people that book my show all over the country. I don't want to get into the business of, as of this date, my new screen name. So I'm riding that pony. I'm riding that horse until it drops, Chuck.
So you had Verizon, and Verizon obviously is
You know
looking
anywhere
for
where my horse can ride? By the way, I'm sorry. Go ahead. Go ahead, Chuck. Go ahead.
Not a good joke, Harry. Verizon, goes in and is taking out AOL.
Yes.
At I think it was like $4.4 billion in cash.
Yeah.
And they're buying it, basically for content and ads, and because Verizon has the pipes already, so they needed that content. And if you take a look at what has happened with that company, again, several years ago, it was given up for dead, and you're able to take that company and create this kind of transaction. That's obviously very good for all AOL shareholders.
HarryHurley.com, HarryHurley.net, HarryHurley.info. I would have been happy to talk to the Verizon people
I'm sure
about
you would
content.
But
Go ahead.
I think they might. They probably haven't found you yet. They might in the next several weeks, Harry.
Thank you, Chuck.
There's a couple other transactions. You still look at the ongoing M&A in the biotech space. There are certain industry groups, Harry, that might be a little overheated, and you need to be careful. Perfect case in point, if you look at what happened with Macau Gaming, a lot of those publicly traded companies, and the one that our old boss is running, has come under significant pressure. So you just need to be very, very careful.
Has Macau hit dilution? Have they hit like an overabundance of the product?
I think Macau is. I think they've had some. They've hit the growth wall, so to speak. But I think a lot of it is more, rules and regulations that are controlled by the Chinese government, which have impacted Macau. But if you kind of look at, and I think, Harry, a good segue, if you look at global growth here and obviously outside the U.S., we look at Europe, and we think there's going to be some pretty good tailwinds in that economy, thanks to, again, lower commodity prices, a cheap euro, and an accommodative central bank. And if you look what Draghi is doing there, what is happening is, it's QE repeated we had here in the U.S., but so look at where we were 5 years ago. That's what Europe is going through right now. So we think that, again, the case in point where international seems to make a fair amount of sense. The overall, global economy, Harry, we think will improve over the next several months. If you go back and look at that, the stronger dollar, weaker commodity trade that we saw that emerged in the middle of last year, we're basically saying that investors were expecting global growth to be soft as deflation fears were rising. So that kind of fell by the wayside. So now we're starting to see some strength in that the trade diminish with deflation fears, those fading away, so to speak, and growth prospects improving. So I kind of get what what you were referring to in that article from the Financial Times, but I think it gets back to, you kind of sleep with one eye open. And that's not such a bad thing, because if everybody got...
That's interesting. Sleep with one eye open on the night where two major markets set all-time records. That I'm telling you, there's an underlying negativity to that.
But Harry, if we all got real giddy about it...
Yeah, I agree with that. You shouldn't just act like, hey, yippee, like happy days are here again. I agree with exercising the caution. How would you say, maybe this fits into this portion of your show, Chuck, how does the American economy compare with the global economy right now? Well,
Harry, look, obviously we're well aware of what's happening in China.
Yeah.
Growth is 7%, and they're not happy. Sure. The expectations, where are we going to come in this year?
We would be doing backflips for 7%.
All right, so we are marginal at best.
Should we be concerned about China and this Russian partnership that they're forging? Are we in a position to get elbowed off the stage as the big dog?
Well, Harry, we've had this discussion for the better part of a decade, and every time we seem to,
But it always seemed like it wasn't true, except it seems like it's true now.
Every time we sort of seem to get to second place, sort of like Avis, we have a tendency to recreate and reinvent ourselves
and rally.
And I'm thinking that's going to probably be the case here. If we can get
there is a potential for a tremendous American revival, a resurgence, where I think GDP could go absolutely wonderfully well in 2017. But there obviously is a very significant event that has to take place for that to be able to create the atmosphere. But I really believe it, that if we unbridle the potential of this country, there are people ready to spend, there are people ready to hire, there are people ready to invest, and they're just staying on the sideline because they don't quite know what the rules are.
Yeah, I mean, more on a short-term basis, Harry. I mean, there's, again, bantering back and forth with respect to the Fed. What are they going to do with rates? Are they going to increase rates? Well, I don't
think they increase them until we actually show that we are growing at a healthy clip. I think they would continue to exercise restraint if we're still in the world of 0.0 or 0.2, in the positive. Don't you think they will continue to just quarter by quarter see if we're healthy enough?
Well, absolutely. I mean,
like if you have the flu or something, or you're not feeling well, there's certain inoculations you don't get because they say don't take a flu shot if you have a fever and you're not feeling good,
right? Because
your body, I think that if we don't show signs of robust recovery, they're not going to put us into an interest rate type of battle. But at the same time, is this one of the longest periods in American history?
It's been the longest.
Yeah.
Harry, you think about it.
It can't be forever. You know what it almost is, Chuck? It's almost. Tell me if this is if it's true or false. And we got to get out of here. I've got this guy that's coming by that hates insurance companies. That's the next segment, but that's another story. Is it true that the economy, the way that it has been handled by this administration, is so bad that we've had to keep rates at zero because it would be devastating if we did what we would usually do?
Well, here's what happens. So the Fed, the inevitable, Harry, is that you're going to get a rate hike. I mean, it's all been but advertised that it's going to happen. So the question is, initially it was in the early part of this year. It got pushed to June. Now the indications are anywhere from September to December. So as we get to that first rate hike,
but you're so close to the end of the year. Is there a reasonable chance there'll be no increase in the whole year?
Anything is possible because we don't have the information, and the Fed doesn't have the information to make those decisions. But what's going to happen is, it's not so much the first rate hike, Harry. I think what investors worry about is the Fed going to become, once they started, they're going to become too aggressive and act in a manner that's detrimental to economic growth. I think that is really the key to all this. So what has happened is remember, if we go back last year, we had that taper tantrum, so to speak, and it basically taught us that investors are prone to overreact, and once yields do start to rise, many are going to become concerned about the possibility of deflation and economic stagnation. So your points are very well taken, and it's not so much the first one. And obviously the timing is very, very important. Again, most camps are saying September. A few are saying December, but it's not so much the first one. That's sort of baked into the cake. I think what happens are the next steps.
So if we got into an environment where every meeting, we were raising 25 basis points, whatever the case might be, then the first one's baked in that it's going to happen. So then the markets not only will not be surprised by that, they expect it, right, Chuck?
They do.
So then that will be a non-event for the markets, right?
Yeah, and if you look what's happened in the fixed income market, it's inevitable. I mean, it's been priced in already.
But if we got into a consistent rate hike environment,
that could loom to be troublesome for sure. Because, again, the economy, I still think, is pretty fragile.
Yeah, I agree. Chuck, thank you for all of your financial needs. Turn to Chuck, 609-383-2010. Chuck Malamut, for 25 years, the official financial advisor to the Hurley in the Morning program. And we'll catch you next week, Chuck.
Harry, thanks for having me. Have a great holiday.
You do the same. In fact, thanks for reminding me, we are going to enjoy Memorial Day, and we have Chris Coleman is putting it together, a very special Best of Hurley in the Morning this Monday. Let me share with you in just a moment about Mike Davis, a New Jersey businessman who has been eavesdropping on the program for the last few minutes. So he's got a little taste for what Hurley in the Morning is all about. Tell you about Mike in just a moment. Just want to remind you that the following program the program you just listened to was paid for by Chuck Malamut, a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this broadcast are those of Chuck Malamut and do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast and are subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation was for informational purposes only. Morgan Stanley Smith Barney, member SIPC. As we feather into the break, and we'll be coming right back in just 2 minutes, with New Jersey businessman Mike Davis. Mike is a longtime insurance giant critic, so I think it's going to be very interesting to I think it's fair to say I'm probably a longtime insurance giant critic. I don't like the way that they operate in many respects. They love your premium. They don't like to pay. They wait until the jury is impaneled, and then they finally settle something they should have settled 3 or 5 years before that. They make people spend a lot of extra money. A lot of things you can criticize with how they work. Mike's going to talk about how the big insurance companies hurt the little guy. And you know how I love movies. So I hearken back to, I'm not going to say it's my favorite movie or even that it's one of my favorite movies, but I really do like the movie quite a bit. And I've watched it multiple times, and it is in my DVD library. The 1976 movie Network. Epic when you consider the cast: Peter Finch, Faye Dunaway, William Holden, Robert Duvall, Ned Beatty, all kinds of people, and many others. Well, Mike is the modern-day Howard Beale. Mike is mad as hell. He's not going to take it anymore, and he is coming up next as Hurley in the Morning continues. In just a few minutes, stay with us.